Decisions of the MPC. The committee decided as follows. 1. Reduce the monetary policy rate, MPR, by 50 basis points to 27%. 2. Adjust the standing facilities corridor around the MPR to plus 250 to minus 250 basis points. 3. Adjust the cash reserve requirement, CRR, for commercial banks to 45% while retaining that of merchant banks at 16%. Also, to introduce a 75% CRR on non-TSA public sector deposits. And 4, keep the liquidity ratio unchanged at 30%. The committee's decision to lower the monetary policy rate was predicated on the sustained disinflation recorded in the past 5 months, projections of declining inflation for the rest of 2025, and the need to support economic recovery efforts. The MPC also adjusted the standing facilities corridor to improve the efficiency of the interbank market and strengthen monetary policy transmission. The committee further introduced a 75% CRR on non-TSA public sector deposits for enhanced liquidity management. Other factors that contributed to the deceleration include the continued moderation in the price of PMS and the notable increase in crude oil production. In the view of the committee, the stability in the macroeconomic environment offered some headroom for monetary policy to support economic growth and recovery. Gross external reserves remained robust at $43.05 billion as at September 11, 2025, compared with $40.51 billion at the end of July 2025, with an import cover of 8.28 months. Similarly, the second quarter 2025 current account balance recorded a significant surplus of $5.28 billion compared with $2.85 billion in first quarter of 2025. Global inflation is projected to sustain its deceleration, albeit at a slower pace due to the impact of trade tariffs and other structural challenges. This trajectory has necessitated a cautious and data-dependent approach to monetary policy easing by central banks, especially in emerging markets and developing economies. Staff projections suggest a sustained disinflation over the coming months, driven by the lagged effects of previous rate hikes, continued stability in the foreign exchange market, and decline in the price of PMS. Furthermore, the onset of the harvest season is expected to increase local food supply, moderate food prices, and contribute to the overall decline in inflation. In its commitment to achieving the core mandate of price stability, the committee will remain proactive through a data-driven policy response. The next meeting of the committee is scheduled for Monday, 24th and Tuesday, 25th November 2025. Thank you.